Welcome back. Now it's time for Forum Daily's weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. All yours, Dan.
Well, thank you for that, Nima. And we are now, of course, in the dog days of midsummer, and with it, a lot of news, especially energy news. This has been a big week. We saw this last week, the week before. Energy prices are starting to make their move. And of course, driven by not just macroeconomics, which the market's been focusing on, things like high interest rates, damage to the economy with higher energy prices and those interest rates and inflation. Markets are now forced to look at fundamentals, supply and demand. It's something we've been talking about now for several months, scratching our heads trying to figure out why the market has been so quickly to move away from the fact that supply is diminishing and demand is surging, not just around the world, but most notably here in North America. The Energy Information Agency, which puts out a weekly petroleum report on Wednesday, put out the fact that the United States had seen its greatest single weekly drop in oil inventories of 17 million barrels. Normally, that would have caused energy prices to go through the roof, but at the same time, we had not one but two debt rating agencies that downgraded U.S. credit worthiness from AAA to double A plus. What that really meant was a bit of a shock that sent prices for gasoline and for other commodities tumbling. But that was really only a one-day event. And of course, with Saudi Arabia now moving with OPEC to, as it were, go it alone if necessary and drop 1 million barrels in production a day with the help of Russia saying it will drop 300,000, it looks like markets are now forced to obey the laws of economics, supply and demand. They can dance around this as much as they want, but what that really means here in Canada is that we're going to definitely see oil prices move towards $85 a barrel for WTI, 90 for Brent, and we could see a continuation of price pressures that will affect gasoline and notably diesel, which of course is an important commodity. It's the commodity in which the global workforce, is established, and for which there is about a 15% reduction in inventory compared to the last 5 years. And what that really means is that we're looking at a scenario now playing out where, in fact, gasoline prices could start to rise 2 to 3 cents a week for the next several weeks. And that means that in Vancouver, 210 could be the new gas price you'll be looking at by the end of August versus the 205 that we're paying now. For the rest of the province, the 170 to 180 range looks like the new normal. As for Alberta, with no provincial tax, $1.40 to $1.44, maybe as high as $1.48. With Saskatchewan, Manitoba, that has provincial taxes remaining in the $1.60 to $1.65 range. Ontario, which of course is paying in the $1.70 range, dropped today, which is Friday, to $1.66.9. Look for that to go get restored back up to $1.70 to $1.72 by week's end. Quebec, which of course is 12 cents a liter more expensive, obviously $1.80 to $1.82 for Montreal, Quebec City, and places in between. And as for Atlantic Canada, which has seen a significant increase in prices, not just because of the imposition of the carbon taxes, particularly in Nova Scotia, but also the second carbon tax, the Clean Fuel Standard. That's likely to lead to diesel prices moving over $2 a liter, something we haven't seen in Atlantic Canada since last November. And of course, with gasoline now pushing well into the mid $80s, look for that to get a lot closer to $1.90. What it really means is that for all the country, we've had a bit of a lull in these prices. I think it's pretty clear that unlike what we saw last year, when we saw record prices in June of 2022, those record prices will probably not be attained. But what is interesting is they won't fall from where they are today, as we saw last year from October all the way into, well, pretty much into June of this year. Instead, look for higher sustained prices in the range across Canada of a national average of about $1.80 to $1.85. And what that means is that inflationary pressures will continue. Not lost on some of us that gasoline and diesel matters. Just look at the inflation numbers and how they move up and down based on energy. It's one of the reasons why energy affordability is something we've built a reputation on, and governments helping themselves to policies that damage energy affordability really lies at the center of why Canadians are finding a tough time making ends meet. Nima, that's it for this week. I'll talk a little bit more about next week, but a lot has happened and it's going to have repercussions well into the fall months.
All right, thanks for that, Dan. Again, that was Dan McTeague, president of Canadians for Affordable Energy, with Forum Daily's weekly energy update.